All right, we are back live with another end of day post wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from postwavetrading.com, home of the world famous post wave price trigger reports. So, by now, you already know, you already done seen it. Today was one of those days. The volatility was absolutely off the chain. There's no other way to put it. The market was just bananas. Absolute bananas. Now, you would think that, okay, so if one particular market is tripping, is bugging, that all right, maybe there's a safe haven somewhere else in another market. I'll be safe if I just go over here to another market. But because we live in a globalist system now, where everything is connected and interconnected, you are no longer safe to do that. No, no, and no. Because machines regulate and control everything. Everything. Okay. There is nowhere to run. There is nowhere to hide. And that's just a fact. And there's nothing you can do about it. Because the same computers that are buying XYZ security are also simultaneously buying ABC security. And because that's happening simultaneously, you're getting the same market actions and chart structure and dynamics on ABC security as you are XYZ security. And once again, there's not a thing that you can do about it. No, no, no. So, what is one to do? What do you say about situations like this? What is one to do? Well, you got to have some sort of mechanism in place that you can rely on to give you objective data points. And in this current day, that is becoming more and more difficult. So I want to try, and I want to emphasize the word try, to encourage you a little bit here today. This is why we have and use the pulse waves. This is why, because things have gotten super chaotic. And I do mean super chaotic. So you got to have something out there that you can trust and rely on. You really do. You got to be able to rely on something. And that's why I developed the pulse waves. That's why I did it, because I wanted people to have something that they could trust and rely on and not have to worry about getting reamed. Because if you leave it up to the normal devices that are available out there today, that's exactly what you will be doing. So I've come to terms with that, and I said, okay, I'm going to try to set out to help as many people as possible. That was my goal. That's what I wanted to do. That's what I set out to do. I said I'm going to help as many people as I can, and that'll be it. But then I realized that on days like today, it requires a little bit more than just giving people a helping hand. No, it's a little bit more to it than that. On a day like today, people have to have tools that they can come to rely on. And that's why we developed the POP method, which is a methodology on managing your open positions in a given market. So we developed that so that you would be able to learn how to do that. All right, that's what we did. And it has worked out very well for us. And we are excited about it, that we're able to help so many people to maintain and to be able to operate in these markets. So that's one of the things that we do here is education. We do a lot of education. We teach a lot of education. And there is a reason that we do this. And one of the reasons that we do this is because there are a lot of people out there selling courses and all this other stuff. And that's not going to help you, not today. The methodologies of yesterday, your grandfather's methodologies, those no longer work today because everything now is computer programs and algorithms. All right, that's what you have now, computer programs and algorithms. And if your computer program or algorithm is not superior to Wall Street's computer program or algorithm, you're gonna get smoked. It's just that there's no other way to say it. You will get smoked. All right. So that's why we developed the PulseWave so that the common man, the little guy, would not get smoked. And today was one of those days that if you are not a member of PulseWave Trading, 9 times out of 10, you got smoked. All right. You got smoked. And I get it. I get it. Some people are a little bit slower to evolve and to do things that they know they ought to do. So with that being said, we're going to jump into some charts. We're going to take a look at where we are and what we can expect moving forward. And then we're going to have a little bit of fun today. All right, so let's jump into these charts. So in no particular order, I want to show you our proxy for the S&P 500, the euro yen. So here is your euro yen. And as you have been seeing throughout the week, the market has been in an overall neutral position with the bears having still the advantage. Well, even with today's chaos, notice how the euro yen rallied powerfully along with the US stock market. So whatever computer program was buying stocks, they were also getting along this euro yen and moving this market up. Now, make no mistake, today was not an accident. Today was the plunge protection team being activated, turning on their computers and buying up securities to prop up the stock market. Because after that CPI number came out, they knew that a bad CPI on back of a bad PPI was going to spell disaster. The Dow Jones futures contract was up over 300 points prior to the announcement of the CPI figures. Once the announcement of the CPI figures broke, the Dow Jones proceeded to plummet 300 points down. So it was up 300, but then was down 300 right after the release. It happened in seconds. The Dow dropped 600 points in a matter of seconds, reminiscent of the good old late 1990s, early 2000s. That's how the markets used to do whenever the FOMC would come out. You would have the Dow would move 600 points, the Nasdaq would move 600 points, and the S&P would move 110 points. Well, that's what we saw today, reminiscence of yesteryear. We finally got that kind of volatility today. And that was due to the plunge protection team turning on those computers, man. Because the markets were they were crashing after the report came out. Crashing. I think the Dow was down, was on its way to be down like 600-700 points. All right, it was off the chain. And then I had a feeling. I had a feeling. I was like, something doesn't feel right. And before I could have a second thought, I saw this monster reversal. So not only did the Dow Jones fall 600-700-800 points after that news, but then rallied up 800 points. Ladies and gentlemen, we had a 1,600 point swing in the Dow today. Unreal. I have never seen anything like that in my career of doing this. And I've been doing this since 1994. I have never seen anything like this before. This was crazy. There's no other way to say it. It was absurd. But I want to warn you guys today. You have watched me here on this YouTube. And what have I taught you? I've taught you about gaps in charts, and I've taught you about the bullish and the bearish pointers. Make no mistake, at some point, this bearish pointer right here from August the 2nd, 2022 will be reconciled. All right? Sometimes charts can go a long time ignoring gaps and pointers, but eventually they take them out. So have fun now, but just know this. Don't get married to the long side of the market. If this trend changes and flips from bearish to bullish, straight up bull market, if this bull market relocks in, go ahead and ride it up. But make no mistake, at some point, you're coming down and you're going to take this out. Next up, the Nasdaq 100. Nasdaq 100 was all over the place today. Look at this. Now I ask you, has anything changed on this chart? As extraordinary as a day it was, did anything change on this chart? Is there technical damage? Do you see technical damage? I don't. Do you see a change in trend? I don't. I tell you what I see though. I see that we hit a new 52-week low today, but you're not going to hear about that. You're going to hear about the insane rally off the low. In one single swoop, not only did the market gap, look at the gap on the market. Look at the open. You open in the QQQ, in the cubes. You opened at $255.16. You closed yesterday at $261.95. That's a monster of a gap, only to come back, fill the gap, and keep right on going. Now, that is spectacular fashion right there. So you've done everything you need to do in one fell swoop. But make no mistake, this is a bear market. The grizzly bear has not changed. Bear market rallies happen. They can be aggressive. They can be explosive. They can be parabolic, like this is a parabolic bar. All right, we had a parabolic bar back here. It's a parabolic bar. It's impressive. I know. Now let's talk about what's going to happen. This bar, today's bar, 9 times out of 10, is going to end up becoming a consolidation bar, meaning that the price action going forward for the next several days, maybe even 2 weeks, is going to happen inside of this bar. The trading range has now been established today, and price action is just going to oscillate between the support and resistance of this bar. That's what you're going to see happen. Now, we do have a rally alert for tomorrow, so I do expect some more continuation upside. You could get another couple of dollars. I think the market could get up to 275, maybe even 280. But is it going to make it up here to the bottom of the Kumo cloud? I don't know about that. If it does, okay, fine. But just keep in mind, this is a bear market, and this is a bear market rally. Even if it goes all the way back up here, fine, ride the wave. But don't get too married to the upside because you're still in a bear market. Now, I'm going to give you another pointer, another, no pun intended. Okay, here's another issue. And this is a real issue, and we need to discuss it because today was a wild day. I'm giving you my experience. I'm giving you everything that I know. But at the end of the day, you're going to rely on the pulse waves, rely on the methodology, rely on the reports, and you'll be okay. All right. One thing to note about this bar today is that it is not a pointer. It is not a bullish or bearish pointer. None ya. Which means that the market does not have to come down here and test or take out today's low. It does not. Which means that you could probably say, if you wanted to put your head out there and say, stick your neck out, you can make an argument and say that today was the bottom of the bear market. And that this rally alert bar is spelling the end of this down cycle. And that now we rally from here and possibly turn from a bear market into a bull market. I know that's saying a lot, but hear what I'm saying. You didn't do a pointer. Now, we got another chart we're going to look at that we can't say the same thing about. But in the Nasdaq 100, there is a possibility that this big rally we had today was just the beginning, and that tomorrow can be even more explosive to the upside. And it's Take Back Friday on top of that. And you've been down all week. All right. I have to put that out there. Now, here's a reason why it may not spell the end of the bear market for now. It's because this gap here has still not been reconciled. You can make an argument that what today was really doing is coming up and filling this gap up here. And so another day or two or three, well, however long it takes to come up here and fill this gap, then the bears come back in up here at this resistance 275 level and beat the market back down. Just be prepared for that if that is what happens. Okay. Wait till we see these other charts. You're gonna get it before this is over. You're gonna get it. Trust me, you're gonna get it. All right, I see you, Loco. I gotta help out our people in the land down under. So give me just a second. AZI, let me hook you up, my man. Let me hook you up because your market is open right now and you need to know what to do. Your Friday is happening as we speak. All right, so let's see here. What do you need to know about this one? All right, so on AZI, looks like you have a crash alert on this one. So expecting this one to make some more downside. You came into today with a crash alert, but you didn't get any downside production yet. But it's looking like you probably are about to get some downside production on this one. And you got flip-floppage. You're still basically in a trading range. I would say the real trading range is this bar back here from August the 4th. It was a bearish pointer, and the market already reconciled it up in here, but then pulled right back into the range. And then this bar is coming back out the range. So this one is still consolidated, but it has a bearish bias to it as the bears are now temporarily in control on this one. All right, and then you have MXC. Okay. What's that? MGC Pharmaceuticals, I think. The MXC? No, it's not. It's yep, it is MGC Pharmaceuticals. I knew it. See? I remember that one. All right, here we go. Let's see. Haven't seen this one in a while. Okay, so this one's been flatlined for a while. It's in a bear market. The bears are in control of this market completely. I see you got the little staircase. You have a support, and you take it out. Then you go sideways for a while. Then you have another leg down, go sideways, another leg down, sideways, another leg down, sideways. So yeah, this one keeps on going. It's not stopping no time soon. No time soon. This one's still bearish. All right, and let's see what else you got. All right, you got IVZ. Let me see here. IVZ. All right, Invictus Energy. Okay, give me a second. Let's see what we got on this one. All right, this one has a rally alert, and it has not gotten any upside production yet. But it looks like you may get some because you got another rally, back-to-back rally alerts. Bottom of the Kumo cloud around the 24 to 25 cent range is the upside target on that one. All right, let's see what else we got. Give me just a second. All right. Give me just a quick second here as I get some of this stuff up. Computer's just a little bit slow at the moment, and so just bear with me. Okay. Almost done. All right. Okay. So the next one you got on here is SYA. All right, let's see what we got on this one. All right, so Sayana, is that how you say it? Whatever. Mining company. Okay. Hey, what up, Mick? All right, let's see here. Okay, so on this one, on Sayana Mining, this one has a rally alert, and it's inside the Kumo cloud. So the top of the cloud is going to be the first target, around 27 to 28 cents. If it can get outside of that Kumo cloud, then it should be ready to run and relock in on the upside and get the bull trend restarted again. So it's been leveling out, basing out from the crash alert back here, and I think now it tried to do something back here, got up, then came down. Now it's trying to build a base to blast off from again. All right. So hopefully those will pay off for you. All right, now we need to start getting into some of these issues, and that's what we're going to do now. Take a look at silver. This is SLV. All right, so silver came down and put a new weekly low in today as well. Now, while everything was exploding, it was just limited to certain markets. It wasn't across the board. Metals did not participate, as you can see right here. You had a little run up into the close, but it's still a down day nonetheless. Bears are still very much in control on this one, even going into tomorrow. The bears have the upper hand in silver. Now, here's your S&P 500 by way of ticker SPY. And if you notice, it looks just like the Nasdaq one. You gapped down and came up and filled it in all one swoop. Now, this one doesn't have a gap on this leg down like the Nasdaq did. So technically speaking, this one can keep going without having to be concerned about pulling back. This one gives more of a case to say that you may have put in a short-term bottom more so than the Nasdaq. But here's the key, though. The Nasdaq's gap is right up in here in this last leg down. The S&P 500's gap is back here, all the way back here on September the 13th. It gapped down and never back and filled. So this one has a lot higher to run, which would put it back at the bottom of the Kumo cloud, its initial target, and even possibly getting above the top of the Kumo cloud. All right, so The S&P has a lot more room to run than even the Nasdaq right now, folks. Yeah, this is interesting, man. And the bulls have the edge going into tomorrow. All right, but you're still in a bear market. So volatility is what it is. All right, look at these bonds. The bond market is 100% broken. There's no other way to say it. There was a 3-point trading range on the bonds today. All right, you hit a new 52-week low, did not participate in the stock market rally at all. Bears are very much in control of this market. I see no end in sight. This market is locked in on the downside momentum, 100% locked in. There's not a thing the bulls can do with this market. It's like there's no bids in this market, no bids in the bonds. But what about the US dollar? What about it? Well, take a look at UUP today. So UUP also did not participate. The dollar came off, so it's been moving higher off of this low point here, only to start. It hit resistance and fell right down immediately. Immediately. So now you're in a bearish position. You move from a neutral position to a bearish position for tonight into tomorrow's trading for the US dollar. I know, man. It's crazy. I know. Now, here is the actual US dollar index, so you can get a taste of what this thing looks like. And it's the same as the UUP, which you would expect. So this one is in a more bearish position. The top of the Kuma cloud is really starting to look like a thing. That 109 level is key. If the market does not hold that 109 support, this thing could drop precipitously. And then you really would have a lot of problems. You would have some disaster. But the one caveat is that for some odd reason, we're picking up bullish intentions even right now. Locked in bullish intentions. So, is this saying that we're at a crossroads? Because look how the selling pressure came in today to meet with the buying that's happening up here. So there's been some buying as the market has been in this bearish predicament, as you can see. The selling has dropped off. The buying has picked up. And then today you had bears come in and snipe. All right. So this one could fall down precipitously in the days to come. Just want to keep your eyes open. Now look at this Dow. Here is your Dow. We looked at the S&P, but check out the Dow. The Dow has the same problem the S&P has. September the 13th gap down, not reconciled yet. And this is what you did today. So this one has also the bottom of the Kuma cloud looks to be in play now on your diamonds. The volatility is off the chain, folks. That gap, I think, is what the market is really gunning for. All right. Here's gold. We looked at silver, but here's gold. Here's GLD. Take a look at this one. All it could do was fall down today. And then it struggled to get up and have a little bump into the close. But as you can see here, overall, the bulls still have the slight advantage on this one. However, you're in a neutral position. There's no conviction here. All right. Not really. Not really. All right. You see how your buying has been picking up even as the price has been coming off. You still got the potential for something to happen here, even though you're consolidated with a bullish bias. The reports are going to be critical. I'm telling you, you're going to have to follow the reports tonight, dot for dot. Don't try to overthink or guess. Just do exactly what the reports say do, and you'll be fine. All right, here is the Russell. The Russell, my hustle. Now, you got the same situation. September the 13th. All right. You got that gap. I think that's what the market's trying to gun for. So that can put prices back in the Kumo cloud, even on the Russell. We did hit a new 52-week low as well. All right. I'm just saying, follow the reports and you will be fine. The reports are very specific, a lot more specificity than I can get into here on the YouTube. But look, take it from me. If you never want to lose again, basically, if you're tired of losing and getting whipsawed and kicked around, you're saying to yourself, I never want to lose again. Well, then you need these pulse waves. You need to go to pulsewavetrading.com and you need to sign up, take the 14-day free trial, and see how much money you can make trading alongside of us over these next 14 days for free. It'll change your life. All right. Don't get beat up. Today, I'm sure it crushed a lot of people. Yeah, man, Europe is in trouble, my man Kyle. Yes, Europe is in trouble. Pretty much the whole world is in trouble right now because they shut down the economies, pretending like they didn't know that was going to have a devastating effect in the future. Idiots, just complete idiots. All right, here's your UEC uranium. Been hearing a lot of talk about uranium, but I haven't seen anything translate into the price. It's still mad consolidated. You're not going anywhere, and you got a crash alert for tomorrow, and the bears are in control of the market. Even though it's supposed to be in a bull market, it's not trending. It has ceased trending like a bull market. So yeah, man, this one looks like it's heading down tomorrow. All right, next up, but do whatever the report says. Don't just take my analysis here. Just follow the reports. You'll be good to go. All right, here's REK, which is the ProShares short real estate. All right, so let's see what this one looks like. Is real estate getting punched in the face too? Oh wow. Okay, this one has done pretty well. Okay, so you had your rally alert back here on August the 16th. You got another alert on August the 18th. Another alert on September the 13th. Another alert on October the 5th. All right. And then final heads up on October the 7th. So today, this market gapped up on the open and then filled itself on the downside. So this is a reversal bar of what the S&P 500 did. Very interesting. And now you put in a new 52-week high and you set yourself up for a crash alert for tomorrow. So it looks like this particular security has now topped out and the selling has now jumped on board. So yeah, looks like this bull market run here is now hit a short-term top. Yeah, man, look, you and I both. I don't know how anyone trades these markets without the pulse waves, to be 100%. I don't know what they're doing. I don't know what they're doing. It's still everything versus the dollar. Yes, it is, man. It's a war right now. It's a war, man. Yeah, the bond market is so controlled and just jammed up right now. I don't even know I don't think they know what they're doing. All right, so let me show you these last two charts and then we'll call it a night. Okay, I was saving the best for last. You ready? Here is Bitcoin. Let's take a look at Bitcoin. All right, so here's your Bitcoin. You guys have been with me for years now. My pulse wave is out there. What is this right here? What is this bar right here? What does that look like to you? Come on. What does it look like? Remember Mad TV from back in the day? He looking like a man. What does this look like? Yeah, man, it's a bearish pointer. That's a grizzly bear right there. That's a bearish pointer. We hit a new 52-week low today in the Bitcoin. A new 52-week low, and we did it with a bearish pointer, a spike low, intraday spike low, only to rally into the close. So you know what that means. Even if this market were to say, you know what, I'm going to catch feelings today, I'm going to rally some more over the weekend. Even if it got to the bottom of the Kumo cloud at 20,500, even if it got to the top of the Kumo cloud at 22,000, you know this bearish pointer at some point must be reconciled. All right. This right here is telling you what the plan is. This is the end game. Today's spike low at 17,765. This is telling you Bitcoin is headed south of today's low. That's why I liquidated my positions prior to today in the crypto. For those that missed the trade journal videos, you need to really make it a priority to peep those. Those are really quick. I try not to be long-winded. I just show you what I'm doing or what I'm not doing, and I'm going to be adding a lot more details on those in the coming days, because we're about to go on a run, ladies and gentlemen. Post waivers, we're about to go on a end of year run like never before, where we're just going to be banging these things out and holding mad positions. I'm so excited about it. I can't even hold my excitement. So with that being said, this bearish pointer is coming down. I don't care how high the price goes in the interim. This bearish pointer is telling you what it is. And this bullish pointer here is also telling you what it is. So at some point, we're going to take out the 22,830. And at some point, we're going to take out the 17,765. I'm thinking we take out the low first before we take a stab at the highs. So just be ready. Now you know what the marching order is. So what is your long-term projections? Or you want to know my projections are? I just told you. The market's going to take out today's low at some point first. Then it'll make a run for the bullish pointer from September the 13th. September the 13th seems to be a key day in global markets. Some markets on September the 13th made gaps that have to be reconciled. Instead of making bullish pointers, they have gaps that they have to attend to from this day. I'm just saying. All right, so you can't make this stuff up, man. That's the markets tell you what it is that they're about to do. It can be forecasted because the markets tell you. Here is your Ethereum. Last chart of the day, your Ethereum. That's a bearish pointer. And we put in a new weekly low here. You know what it is. The market's coming here, man. The market is coming to take out this low, which means that Ethereum is probably going to drop way below. And I mean way below 1,000. It's looking like it may drop even below 800. I know I'm the bearer of bad news. Just don't hurt me. Okay, I'm sorry. I'm sorry. I'm so sorry to have to tell you these things. All right, so you know what it is. All right, you know what it is. This is what we're dealing with. So with that being said, hope everybody has a great weekend. Don't forget to smash that like button. And likewise, it's going to be on and popping over these next couple of days. As you know, Friday is Take Back Friday. Friday for crypto starts now. It started at 6 p.m. Eastern Standard New York time, and it's going to run until 6 p.m. Eastern Standard New York time on Sunday. All right, so let's see how the dust settles, and then we'll be ready to jump in here on Sunday. Okay, man, crazy day. This is those times too where you're going to need to follow the reports. Don't try to second guess or any of that stuff. Just be mechanical in your approach. Be mechanical. All right, that's all you got to do, and you're going to be fine. All right, don't try to overthink anything. Just do whatever the report says to do, and that's it. And just leave it at that. And the market will do the rest. It will do all the thinking for you. This is all you have to do. Okay. All right, people, you know what it is. Bulls make money. Bears make money and picks get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.